Welcome to the China-U.S. Economist Talk, or Econ Talk, as a special edition of CGTN's Global Business. We are broadcasting live on Weibo, Facebook, Twitter, and YouTube. I'm Kate Kuei in Beijing. While the global population looks towards vaccinations to get the COVID-19 pandemic under control, economic and business activities are gradually returning to normal. On one hand, the pandemic has changed our social behaviors over the past year, and on the other, we have governments looking to stimulate their economy back to pre-COVID-19 levels, and many are looking for a speedy recovery. Over the past year, big technology companies, especially platform economies, saw a boom, and the world has become more digitalized during the past year when people have to stay away from each other. In the meantime, though, some small and medium-sized companies suffered losses or had to even close their businesses. We have seen inequality exacerbated in certain countries, with their poverty level rising, with resources and wealth steering towards a handful of privileged groups. We also have U.S. President Joe Biden's government eyeing a $2 trillion infrastructure budget, with more money printing in the pipeline. Well, in the meantime, Bill Huang, a veteran fund manager on Wall Street, caused a disastrous loss of billions of dollars in less than a week due to a lack of proper supervision and regulations. There are also massive amounts of debt at both government and corporate levels in less developed countries, with the possibility of going default. So how can we construct a better post-pandemic world with fair regulations on business entities, especially the digital economy? What is a responsible fiscal and monetary policy for key players in global economy? And is capitalism in the U.S. really for its people? Today, we are honored to have Professor Luigi Zingales from University of Chicago booth. He is a world-renowned economist and also a director of Stigler Center and a member of the Committee of Capital Markets Regulatory. We also have Samuel Mok, former CFO of the U.S. Labor Department and the U.S. Treasury Department, and Professor Qian Jun, a widely respected economist in China, and he is the Dean of Fanhai Institute from Fudan University in Shanghai. So Professor Zingales is joining us from Chicago. Mr. Mok is participating from Washington, and I'm honored to have Professor Qian joining me in Beijing studio. I specifically want to point out that Mr. Mok worked for two U.S. presidents, namely the Reagan administration and also the George W. Bush administration, and I'm sure his time in government will give us insight into the status quo. So I look forward to a candid discussion today. Mr. Mok, let me start from you first. Reagan administration and also George W. Bush administration, they both refrained from printing money and kept their tax rate low. So how do you like your big Biden government right now?
Well, first of all, I want to thank CGTV and Katie for inviting me to this program. And I'm very honored to be in the company of distinguished Professors Zingales and Qian Jun from Chicago and from Fudan. As a George W. Bush scholar myself, for those who don't know what it is, those of us who spent our college years doing everything except studying hard, party and all that, but despite that, we graduated and achieved okay in life. So being such a mediocre scholar to be with such distinguished professors is very humbling. It's kind of like discussing philosophy with Confucius. But when you talk about the big spending, and I actually served three presidents, Reagan, Bush 41 and Bush 43. So I had experience with three U.S. governments at a pretty senior level. The question is, how do I like the Biden's big budget? I am a card-carrying Republican, full disclosure. But however, I did not vote for Trump first time. I did not vote for Trump the second time. I supported Biden. Here's the reason. I think you can say that his big spending, but to me, sitting where I am, working in the trenches from the grassroots level, doing organizing and political events, I look at that as a bold infrastructure spending investment. The difference between that and spending other things is like making wars in other countries, building bombs that Pentagon may not need. This is investing in America's future. If managed correctly, it will produce jobs, blue-collar jobs, union jobs, which I think is very important. If you think about this, over the last decade or two, a lot of blue-collar and union jobs are decimated for many reasons. And that's why you led to Trump. There's a lot of anger in the lower class wage workers. And with this infrastructure, not only will bring back a lot of these jobs, especially union jobs, it will also refresh the infrastructure in America. At the same time, hopefully produce productivity and invest in future. So in a very bizarre way, I'm not a Democrat, but Biden and Harris team may be inadvertently or ironically carrying on the Trump policy of making America great again by investing in the future. So I hope U.S. Congress will support that. I hope they will pass that infrastructure bill, if not through the reconciliation process. I also want to tell all my Chinese friends that even though this is an American program, there will be benefit for Chinese business people because of trickle-down supply chain, job opportunities as we build more roads, as we build bridges, as we repair our railroads, we build, charging stations. So I can go on for a long time.
Right.
So I'm optimistic.
Right.
But we have to make sure that we invest this money and manage it correctly.
Right. So, Professor Zingales, do you think it is hopeful that these money can be responsibly allocated and spent, managed properly, as what Samuel Mark just wished?
I hope that's the case because certainly America does need a lot of infrastructure. I'm only worried about the quantity and the speed that generally are never a good idea to make sure that things are done properly. And while I am a strong supporter of the need for support, especially last year when the COVID pandemic hit the U.S. economy and a lot of people found themselves out of job, I think as the economy is restarting, and I think that the signs are very clear, as the economy is restarting, I don't think we need particular stimulus to the economy because there is a serious risk of overheating the economy. So my concern is that Biden is doing too much too fast.
Right. I think that's fair enough. Frankly speaking, you had a lot of papers on the regulation. How can those money being printed so fast properly being regulated? Have you thought about that, or any suggestion that you can give to your government?
No, I think that one of the generally best form of control is the control that comes from an inquisitive media. But most of the media today is so much in love with Biden that whatever he does, they don't criticize him. So I think that there is a lack of accountability, which is very dangerous.
Right. But Professor Qian Jun, China, we had such kind of experience in terms of money printing to boost the economy, especially in the infrastructure sector. So do you think there's anything that China can share with the U.S. On money printing in this front? But having said that, we have never printed that much money and that fast.
So yes, actually, for someone who lived in the States for many years and now returned to China for more than 7 years, I can bring in two episodes for China. One is, of course, after the 2008-09 global financial crisis, China introduced the 4 trillion stimulus.
Right.
Back then, it was mostly for traditional infrastructure, including rebuilding Sichuan province after the big earthquake. And then, of course, it was last year.
Right.
China also introduced a stimulus, but the extent, the amount is much smaller, much smaller.
Right.
So I do share what Professor Zingales said about certainly there needs to be a stimulus. And also, certainly from the U.S. perspective, infrastructure needs some updating.
Right.
But going back from China's perspective, I think there are two things that are important. One is that despite having the largest and the deepest financial markets in the world, that being the U.S., the markets cannot solve all the problems. Huge infrastructure projects cannot be financed entirely by the markets.
Right.
Otherwise, it would have been done years ago.
Right.
So in that regard, the planning done by the Chinese government, there's the regular planning, but there's also planning after an emergency like 2008-09 or 2010. So I think government's role in this type of large stimulus is very much needed.
Right.
That's lesson number one.
Right.
The other thing that's I think it's very important from the Chinese perspective, I actually did a lot of research on this, as well as Professor Zingales' Chicago colleague, Professor He Zhiguo.
Right.
So we studied what happened after the 4 trillion stimulus. Most of that stimulus was in the form of newly issued bank loans. And as Professor Zingales correctly pointed out, it was too fast and too large scale.
Okay.
And that created a lot of problems.
Even
So
for the money that we printed before.
it's actually not money printing, it's actually credit expansion.
Credit expansion.
So if you look at last year, there was an expansion, but the size of the bank loans is smaller relative to debt.
Right.
So we were using a lot more debt financing than bank loan financing. And that's a good change from 08, 09.
Right. So even with that scale, we've already seen some hidden, not crisis, but hidden problem. So how do you think U.S. can handle all these money printing or financing with such a big scale of number?
Again, we can listen to the two experts, but they're actually different, right? There's the fiscal side and there's the
monetary
Fed,
side, yeah.
right? So the Fed obviously created a lot of liquidity last year, but on the other hand, one can argue that at least in last year, in a very uncertain world, the need for safe assets, including dollar-denominated assets, was very large. So the idea was when you print a lot of money, liquidity, the global financial markets can take that in. But this year, as the economy grows faster and faster, you certainly have to worry about inflation. Even though we don't know how soon it will come, that's on the monetary side. On the fiscal side, obviously you worry about the debt level, which already reached a very high level.
Right. Talking about the fiscal policy and also the monetary policy we just touched upon. Samuel, Mark, you have been in the Treasury Department, also Labor Department for very long as a government official. We saw that Janet Yellen advocated a global threshold of corporate tax just several days ago in trying to attract more foreign capital back to the U.S. to boost domestic economy. And in the meantime, they're not cutting corporate tax. Well, some entrepreneurs in the States, for instance, Jeff Bezos, are trying to encourage increasing corporate tax and trying to fund the growth of the U.S. economy, which is very different from the two governments where you served. Why is that? How was the economic situation changed? And do you think such kind of policy makes sense?
I think the global tax is not a new idea. Actually, Trump, will have to give him some credit, did some of that. IMF and World Bank supports that. Some tax haven countries, such as Ireland, that's probably going to fight it tooth and nail. All it does is basically telling a company that if you're going to shift profit to a country that is lower tax, we're going to top it off in this country to offset it. So that will kind of stop the erosion of tax base. It's not necessarily a bad idea. According to some report I read, I think OECD is primarily driving that at least $50 to $80 billion the company would have paid under this new scheme. So I think it will be passed. Some form of it will take place. The only problem is this is not a treaty. So the Republicans come back, they can reverse that. So it's a temporary thing. Number one. Number two is when you talk about Jeff Bezos supporting the increase in tax. Now, some of this, tax equalization can use to help pay for infrastructure. The way I look at Jeff Bezos supporting this is Biden has a history of singling Amazon and Jeff Bezos for not paying their fair share for aggressive use of tax credit. Right. Now Jeff Bezos stepping down as CEO supporting this reminds me of the British. I grew up in Hong Kong. Reminds me of British denying the Chinese people of democracy and free elected government until they exit. Now they talk about democracy. So in some way, I see Jeff Bezos doing the same thing. Maybe not fair to him.
So Professor Zingales, I saw you smiling. So do you have anything to add on that?
No, I first of all like very much the analogy of the British in Hong Kong. I thought that was very appropriate because I do feel that there is a lot of that in Jeff Bezos. I think that the first rule is to try to eliminate the illusionary loopholes because a lot of tax illusion takes the form of transfer intellectual properties at values that make no sense. And I think that I don't think it's a bad idea to try to homogenize taxes a bit, but I think that the first step will be trying to step up enforcement. And since Janet Yellen is the Secretary of Treasury, she has the power to do that. I think that should be the first thing that she does.
Oh, okay. So on one hand, you're trying to attract all the capital globally back to the U.S. To fund domestic growth. There's nothing wrong about it. But in the meantime, you're not trying to, but you're probably indeed creating an inflation problem and probably going to export inflation globally and might also create the debt in a third world country. So you are creating a debt problem globally and make the debt problem locally to those countries where you are attracting global capital. Is that fair?
No, first of all, I think that a little bit of inflation might actually help the public debt because it might erode some of the real value of the public debt. So I think that a lot of countries, from a public finance point of view, will sign off for a couple of years at 4 or 5% inflation, will cut down the debt quite a bit. So I don't see this necessarily as a problem. Now, if there is a massive rise in interest rates throughout the world, I think that yes, the developing countries might actually suffer of that. But I think we are some time away from that.
Right. So let me just follow up one question for you. So you do think that all these debt in a third world country nowadays is still manageable? There's not going to be huge, massive default after COVID?
I think that depends a lot on what is the structure of real interest rates throughout the world. If the current situation continues, I think that the debt of most countries is manageable. If for whatever reason there will be all of a sudden a shortage of capital and a rise in interest rates, then a lot of countries, starting with the one I come from, Italy, will be in trouble.
Right. Okay. So the interest rate is one of the key issues, apparently. So during the COVID-19 period, we do see a lot of business suffer from it. But however, one sector is booming, which is technology sector. We use technology quite a lot, and technology indeed helped us as well to get ourselves better protected. So technology sector, digital world, and especially platform economy are growing. And I see, like all of you, have a lot of opinion on the platform economy over the past years in your speeches and in your public talks and in your paper. So what are the regulations needed nowadays to make the technology work for good, to be responsible and make society more inclusive? So Professor Qian, I'll start with you on this.
So obviously this is a very important question. So I will start with the fact that if you look at the global stock markets, the most valuable companies, a lot of them, a few of them from the U.S. and a couple of them from China. They do share something in common. One is what we call platform economy.
Yes.
And two, I think what's important is not only technology, but these companies have big data,
right,
consumer data, and they have very cheap ways of obtaining the data, and then they can have many ways to use the data or reuse the data. So in terms of regulating technology and regulating platform economy, obviously, in the traditional antitrust literature or regulation, we care about consumers.
Yes.
But if you look at what the U.S. government, European government, and the Chinese government are currently doing, in a world of platform economy, obviously we do care about customers, of course, but we also now need to look at smaller, uprising, smaller platforms access the market, right? Whether these big platforms help them to grow or just eliminate them.
Right.
That's an issue. So the fair access of these smaller platforms is an issue. The other point, obviously, is the data use.
Yes.
Big data use. And you've seen different governments rolling out different policies. The point about big data is that, on the one hand, it has some sort of a public property, right? The other thing is that the more you reuse it, the more value you will create.
It's machine learning, basically.
Exactly. So to me, the important thing about regulating data use is the balance. Is strike the balance between protecting privacy, but also you have to have some form of sharing.
Right.
Whether that's sharing between companies, platforms, or between government and platform. Because without the sharing, you can't create value. So the key, I think, is strike a balance. And if you go too far in one end, you basically eliminate any business opportunities. Obviously, we know that if you go to the other extreme, privacy becomes a big issue.
Right. Previously, I think all these platform economy problems in the internet sector are mostly FAANG companies' problem in the States, Facebook, Amazon, Alphabet, those people in Google. But nowadays, I think China also has a lot of internet giants, which has a similar problem as what the U.S. Internet giants are facing, platform economies are facing. And previously, the platform economies, I still remember in Jean Tirau's book, they're talking about Visa card, MasterCard, the kind of type of company. But nowadays, it's very different. We're talking about all those companies with a definite network effect, and they can roll out very quickly. So as what you just mentioned, there are three problems in those platform economy. We probably need to better regulate. One is the kill zone problem, as was Zingales also mentioned in his paper. And the second one is data privacy protection. And third one is probably monopoly. So Professor Zingales, what's your take on that? How can China and the U.S. work together to better regulate all those platform economy while they're growing out of control, but making sure technology is working for good?
That's an excellent question. I think that the first step is try not to escalate in a kind of a Cold War, because to some extent, both sides use this tension to entrench themselves and become untouchable. When Mark Zuckerberg was testifying in front of Congress, one of the notes he had in front of himself was remind Congress people that this is an American company and that we depend on that and blah, 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 all the stuff. So the nationalism is used to defend the existing big platforms and to make them untouchable, because he said, oh, if China has big platforms, then the United States can do. And the Chinese said, oh, if the Americans do that, we should do as well. So I think that maybe they should try to find a common approach to regulation, because at the end of the day, both sides lose if there is too much concentration. They lose in terms of innovation. There are also important effects on redistribution of income, because it's not a coincidence that the richest man on earth is Bezos, because most of the rents are accumulated at the top. So I think that both countries have some common goals, and by outlining some regulation that works both in China and the United States, they can help avoiding this escalation of tension that only helps the incumbent to become stronger.
Right. Do you think Biden administration, the attitude towards all those platform economy in the States will be different from what Trump administration was? Will they treat them nicely, or will be more stringent in terms of regulation?
I don't know. I think we are still trying to find out. Certainly, the Obama administration was in love with big tech. So Biden seems not to have taken the same approach as Obama. President Trump was a bit more schizophrenic on the issue. And on the one hand, he was barking a lot, but I'm not so sure that was ready to bite in a very effective way. But there was no time for us to see. I think that the Biden administration is moving pretty slow on this dimension, has appointed a very young but very prominent scholar at the FTC with a track record to be very aggressive against big tech. So that's a sign. But it's a small sign. We'll see. We don't have the full picture yet.
Right. Great. We're looking forward to that. Mr. Mok, you basically also served very briefly in the government when Bill Clinton was still under his administration, if I remember correctly. So at that time, I think Bill Clinton's administration is also very much in favor of those kind of technology companies. And he himself actually led the Silicon Valley boom, so to speak. So why do you think all this attitude has changed over the years, people's attitude towards big techs? Because that they have more and more data, so people get more concerned. Their power is much bigger now. From the very beginning, 20 years ago.
20 years ago, 1992, Bill Clinton and President Gore ushered in the information technology, using that to improve Americans' quality of life and reinvigorate the economy. So what happened is they increased substantially, 43% in civilian budget, 53% in university R&D. Inadvertently, I think history will tell, they might have unleash the fourth industrial revolution. over the last 20 years, the entire digital economy, the whole technology has taken leaps and bounds. But it also increased a lot of other, create a lot of other issues that the two professors talked about. But two things that nobody talked about yet. One is the big data monetary value that I think as an accountant myself, is an asset on the books that are not being recognized because big data is very valuable.
Right.
The second thing is I point out to everybody about the insurrection on June 6th this past year. The FBI is conducting one of the most massive manhunt, and they are successful in catching just about everybody who invaded the Capitol. This would not have been possible 10 years ago because they use big data, because they synchronize highway toll cameras and hotel check-ins and cell phone locations. So even though you wear a mask, wear a hat and a face shield, they still got you. That basically will create all kinds of privacy issues. What if the wrong people get hold of this information? So I think those two things are beginning to scare Americans. And as we read more about what's going on, especially with this arrest of the intruder, the attackers of the Capitol, we realize the power of big data. And I think it will lead to more regulations. I think who's going to sit on FTC, like the professor said, eventually, and who sits in the White House on technology, I think that will kind of help the future direction.
Great. Professor Zingales, I want to ask you a question about inequality, because while technology is upgrading, more innovation are coming to our social society, we're supposed to have a more evenly distributed economy and becoming more inclusive, so to speak, with all those social and economy institutions becoming more inclusive. This whole society will be more evenly distributed. It's going to be a common prosperous for all the citizens. However, we are seeing a reverse trend and more equality, especially in some countries, for instance, like United States. How would you explain that?
So there is no guarantee that more technology would bring more equal society. In fact, it's quite possible the opposite. A late colleague of mine, Shavin Rosen, has pioneered 40 years ago the idea of a superstar economy, which was very much driven by technology and globalization. And I think that we see the effect of that. So I think the role of a democratic society is to manage technology. Technology can be good, can be bad. We know the abuses that technology that was done of technology for military purposes, and I think that we should limit that. We can even in the medical area there could be terrible things that can be done with technology. So I think that the role of democratic society is to channel technology in the direction of a shared prosperity.
Right. So Professor Qian, well, as what Professor Zingales just mentioned, Ace Mongrel also have the similar argument, saying that government probably should control technology better to make it more efficient in terms of making the society more inclusive. Do you think China government has done enough in terms of regulating the platform economy and then making technology for good?
For the platform economy, China has done quite well in terms of, we saw these giants arising. And it's actually done in a framework not under government regulation, but driven by the markets. In other words, the markets in China selected the current giants. So right. That's observation number one. Observation number two is that there's no doubt the Chinese government now recognize that they need to regulate these platform economy. And one of the reasons I just said is that if you look at the documents they're putting out, they care about customers, but now they also care about the access, the entrance of new startup companies, right? Because the idea is that
they're protecting for innovation.
Exactly, and you need to have competition,
right?
To make things better and fair. That's one. Number two, it's very important that when you regulate, regulating on the wealth distribution, to me, is not that efficient. Helping people to have access, to have equal opportunity, perhaps is more efficient, and that's why in China, even the tech companies, we've seen this. It's kind of interesting. A simple example is that, whenever you go within China, we can travel within China, right? You need to have a cell phone to do all the scanning.
Scan all the barcodes, yes.
And then senior people cannot do that.
Right.
So far, I've seen people at the stations helping them by hand. But I know that now the tech companies are going to roll out cell phones for senior people.
Right.
And the key is it's very simple. They only have like 5 apps.
Right.
So that it's much easier so it's technologies and regulations that make sure more people have access to technology and make use of it. And that's the, so in that regard, I agree with Professor Zingales. This is what we call the more inclusive economy, more opportunities for it.
Right, fair enough. So it seems that we have a consensus on that front in terms of technology regulation for the platform economy. Mr. Mark, you worked in Reagan administration as well. While we are now talking about the consensus on regulating on the technology front, the era that you worked in the Reagan administration, we're almost having, we had a kind of Cold War attitude between the Eastern Bloc and the Western Bloc. We are also seeing China and U.S. Relationship gradually becoming warmer from a very cold period during the Trump administration. How would you view the current situation between China and U.S.? Is the Cold War mentality can be described on the relationship between these two countries right now, or you think this mentality will actually go away quite soon, and then ice can be broke very soon?
Well, I've been very involved with U.S.-China relationship since the establishment of the diplomatic relationship between the two countries. So I've seen up and down, and being Chinese American, travel between the two countries a lot, and a bicultural person, I witnessed a lot of things that went on. I would say that right now, some people describe a Cold War, but I don't think things are as bad as people think. People tend to have short memories. Korean War, U.S. and China were killing each other with troops. Hundreds of people, 100,000 people died on both sides. There was a complete military blockade against China. So that hasn't happened. And then subsequently, the bombing of the Yugoslav embassy, the airplane collision over Hainan, so forth and so on. There are many, many incidents that brought us to the brink of true hot warfare, kinetic warfare. Right now, it's a lot of rhetoric, a lot of bashing each other, mostly started by Trump. I don't think, and I've told many people, my friends in China, if you think Biden administration will create a better atmosphere, superficially that's true. The way I describe is that Donald Trump tried to provoke China into a Thai kickboxing, frontal assault, a lot of blood. Biden will carry on the same struggle, but with jiu-jitsu and judo. So you don't see the punches, you don't see the blood, doesn't mean the blow is not there. The problem that Biden has with U.S.-China relationship probably is more difficult to deal with than Trump, though I'm not a Trump supporter, because the Democrats and Biden folks care more about issues that are fundamental to the core value of China. The American version of civil rights, the American version of human rights, the American version of trade union. You're touching on China's sovereignty. So these difficult issues are not easy to resolve. With Trump, you just cut a trade deal, give him some concessions, he's go home happy.
He's a businessman.
It's a very different situation. I think U.S.-China right now, China has about a year's window to work on things that we can work together, because a year from now, the whole Biden administration will be focused on the midterm election, and China will be subject number one again in the election.
Right, okay, that's very insightful. So Professor Zingales, if you listen to Mr. Mark's word, he said, American version of this, American version of that. And I know you're from Italy. When you were in the U.S., how would you interpret your Italian version of things to the U.S. people and make them, have the consensus? So maybe we can learn something from you, because you're apparently very successful in the U.S.
I think that what I see, if you want, as a spectator of this, is that unfortunately there is a collision course between the United States and China, in the sense that the entire post-World War II order has been created with the United States at the center, and assuming that they would be the only superpower around. And I think that China's come of age, and it is a superpower and wants to be treated as such and want to share the power at the top. And I think that is very difficult, in my view, for American people to appreciate that they need to look at the world in a different way. I think that they're used to be at the top, and now they're still at the top, but they share the top. And I think that they need to learn to share.
Right. So what do you think can actually make them learn to share and appreciate the newcomers faster? We don't really say,
I think that
China
one
way.
thing that would be very useful is for Americans to study more history, and particularly more Chinese history. I think that the curriculum in high school is mostly science-based, it's not history-based, and certainly not full of world history and so much in college. So I think that having more experience of the long tradition of China and how China moves based on some common pattern that you can recognize over history, I think is very useful. And I think that the more you understand who is on the other side of the table, the least likely it is that you're going to fight him.
Right, I think that's actually very helpful. As long as we have a solution in hand, I think we can still be very optimistic. So just give us some tips in your mind that you think U.S. and China can work closely in terms of next step. What are the possible areas in your mind?
So I think that the United States are concerned very much about property rights, for example, and the amount of technology appropriation that has been taking place in China. I think that at some level, every developing nation has played that game. The United States has played that game with England when they were a rising nation. So I don't think that it should be that surprising. But as China is coming of age, I think that China can stand to enforce those property rights more thoroughly and reduce the pressure of sharing technology that very often is imposed to investors in China. And I think that will reassure the U.S. side. And in exchange, I think that the United States can reassure that they're not going to impose massive trade barrier or tariffs, and that at the end of the day, there are important gains for trade that needs to be preserved. And I think that if we don't go into the Cold War mentality, I think those gains for trade can be preserved.
Right. So Professor Qian, what is your take on that?
So I think the first thing is, as both said, I think keep the communication channel open is very important, right? And the more you know each other, the better off. So in that regard, in general, I think the Chinese study U.S. a lot more than the other side. So as Professor Zingales pointed out, right? I mean, I spent a lot of years studying the U.S., so I know especially I know how the U.S. economy grew. But if more Americans learn not only Chinese history, but know sort of the Chinese economic path to prosperity,
they would appreciate more.
You will see, there are differences, but at the end of the day, the government is simply trying to do what the government is trying to do is to help people have better living standards.
Right.
And in that regard, different countries can have different paths, but at the end of the day, we have the same objective. And I think that's very important. The other area, I think, for cooperation that is happening, which is very good, is environmental protection, right? Especially with the Biden administration rejoining the Paris Accord. That's at least one area over the next few years. We don't know what's going to happen in 4 years. So that's one big area, because China and U.S. are both very important economies and also pollutant in terms of emission. So if these countries can work together, it not only helps industries in both countries, but it does help the entire world.
Right, so we do have a lot of mutual grounds that we can actually work with in terms of facilitating bilateral relationship and work together, avoid the Cold War mentality, so to speak. Mr. Mok, you are a accountant, CFO, background person. Now we see digital currency is becoming more and more popular. I'm not going to ask you a question about Bitcoin because I know that's still quite controversial. However, what's your take on the digital yuan or the digital US dollar progress globally? And what do you think will be the possible repercussions in terms of making certain currency fully fungible as well as the general repercussion towards the whole monetary world?
I'll be happy to talk about that, but before that, I want to spend half a minute to add to what the two professors said.
Sure.
I think what they just suggested are very, very good, but maybe a little difficult to implement from my experience, political experience working in the grassroots, because America is the only country that you can drive from Juneau, Alaska to Key West, all one culture, one language, one way of life, and one basically shopping mall, so forth and so on. Very difficult for Americans who want to learn about China. They see no need. As I work throughout different states on political campaigns and things like that, people don't care. They were more concerned about what's happening in their area. So I think that is where we have to begin. And the Chinese government have a great diplomatic team here, but they need to do more work on public diplomacy, which is a new thing in China. Going back to what you talked about, the digital economy, I believe the reason why America can run such a huge deficit and continue to print money and continue our way of life is because we have the most powerful army and military in the world, and we also dominate the world financial infrastructure. So therefore, if we want to sanction somebody, our long arms can reach around the world. No other countries can do that. And that's why US currency is the preferred currency of acceptance by many people. If digital currency become popular, it threatens that order, it threatens that domination. So I believe that I cannot speak for the US government, but I believe that many, the US government is a divided organization. There's no one monolithic organization. I believe that my impression is the government position on this is conflicted. On one hand, they like to have the digital currency because allow enforcement a lot easier. You can trace money laundering, so forth and so on, because we all leave digital footprints and fingerprints, whether you like it or not, like the rest of the insurrection people in for January 6th insurrection. That is evidence that we cannot really hide under digital currency, digital economy. But on the other hand, the rise of the digital yuan and the digital currency, China being pushed right now, if successful, can threaten the domination of American dollars. So I think the government attitude, US government attitude, probably is conflicted and has to be sorted out.
Right. So Professor Zingales, can you respond to that answer?
Yeah, I actually think that there is a little bit of overreaching of the US in their power, because the fact that every nation on earth is basically subjected to US legislation because they clear their banking system, clear dollars, is an overreach of and I think there is an increasing resentment in a lot of countries in the world that they don't want to be part of that, especially when the decision taken by the US tend to be volatile. This is one administration sides with it makes a deal with Iran, and then the next say cancel, and then they come back and they're going to do it again. And so if I am a European and I'm dealing with Iran, why do I have to stop and restart every so often based on what happens in Washington? And the only reason why if I'm a European, I'm subjected to that is because the European banks clear dollars. So I think there is a demand for an alternative currency, and I think that if the Chinese government starts to issue a digital renminbi relatively fast, might gain market share in that dimension. So I think is a serious threat for the US government, and I don't think the US is ready to issue a digital currency yet, a digital dollar yet. So I think it would be interesting to see what happens.
Right, so Professor Qian, according to what just Professor Zingales said, we might not even need a global stable currency. We can choose regional ones to set our regional trade, so to speak.
So on the one hand, I agree that having only one dominant currency makes the system unstable, at least
Right.
now, right? This is not in the 1970s or before, where one country is strong enough to
Yes.
support one currency. But on the other hand, the transition from one dominant currency to maybe a basket of currency, that process is also volatile, right? So the better route is that, not one single currency can compete with dollar in the near foreseeable future.
Right.
So maybe what you need is like a basket of currency. So euro, for example, during 2020, if you look at the clearance data for global transaction, the euro was used almost as much as the dollar, and that reflects global investor the need for a different currency. So
Right.
that's one point I want to share. For the digital RMB, at the moment, what we've seen is for domestic circulation.
Right.
And in terms of monetary terms, it's actually pretty simple. I mean, it's just replacing some of the paper currency, or what we call the digital payment system,
Right.
in circulation. That's it.
Do you think it will help for RMB? Will be helpful for RMB to become fully fungible globally?
Certainly, going forward, not just the Chinese government, not only the Chinese central bank, but the ECB is talking about a digital euro,
Right.
Japanese central bank as well. Certainly, if you have these digital currency paired with blockchain technology in these cross-border transactions, it will make these currencies more efficient, more attractive. It will lower the cost, and again, it's better monitoring. But at the same time, I also need to point out, in my view, the reason why you see Bitcoin and other, more stable, what we call decentralized currencies,
Right.
the price is going up so high, is that there's always need for transactions that are not monitored. And that need is actually quite big. So I think what you're going to see is, especially in the global monetary system, you're going to see a multi-layer.
Right.
You're going to see the major currencies have their digital version, but you will continue to see this other means of transactions, if you
Right.
will, because there's always that need. And then certainly, as you said, in certain trading blocks, the need for a particular currency might be stronger.
Right. Okay. I think that's very interesting. It's also an involvement, so to speak, with our general involvement of the socio-economic development. So finally, gentlemen, let me ask you this question. Please give me a very, very brief take on your attitude towards Bitcoin. So I'll start from you, Professor Zingales, first.
I think that the underlying technology is very interesting. Bitcoin is just a nuisance, a distraction. I don't think we'll have really a future as a currency, maybe as a speculative asset, but not as a currency.
Great. Mr. Mock, what's your take?
I agree with the professor. It's a fad, will be fashionable for a while. Something else more substantive will replace it.
Right. So Professor Qian, what's your take?
Yeah, I more or less agree. And again, the invention of Bitcoin and the underlying technology, I think that's revolutionary.
Right.
It actually changes not only the monetary system, it actually changes how I look at economic contracts.
Right.
But if you just look at these coins, cryptocurrency, they're a better version, safer.
Right.
In terms of how users monitor each other. So I don't think that's going to be a long-lasting asset, if you will.
Right. So great. I look forward that history will prove that you are all wrong on that. Okay. With that, I want to conclude for today's very candid discussion. I like what Professor Zingales said to his students, which was very widely shared online. 20 years from now, they might have already forgotten all the details of my course. but hopefully they will not have forgotten the way of thinking. While I also think economists should not just interpret the world and teach us how to think, they should probably change it for the better. So thank you again, gentlemen, for a very candid discussion live today, and we look forward to more enlightening talks in our coming editions. I'm Kate Quay. Until next time, goodbye. Thank you.